Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for a stronger start given the recovery that we've seen across the globe. The sentiment perhaps remains to be a bit of positive given HDFC Bank numbers continues to be a little bit upbeat. At least on the face of it, we're going to be decoding the numbers in just a jiffy. But GIFT Nifty is indicating somewhat a muted start coming in for the Wall Street, and Wall Street ended higher as optimism over earnings outweighed higher rates, fears essentially. Asian markets have also started off on a strong note, and FIIs, well, the trend there doesn't really change. The sold shares worth around 593 crore and DIIs have bought equities to an extent of 1,184 odd crore. Let's also talk about FII in FNO Qs. What are the Qs suggesting there? They continue to be net buyers in index futures. They've sold off the index options. They've also been the sellers in stock futures. Along with that, they've been sellers overall in bank Nifty options. So that's a bit of reference there when it comes to the FII data. But what comes in FNO ban, what is new in ban is GNFC, MCX. What still is in the ban is SAIL, BHEL, Delta Corp, Sun TV, Balrampur Chini, Hindustan Copper, India Cement, Manappuram Finance, India Bull Housing Finance and PNB. Couple of names out there. What comes out of the ban is L&T Finance Holdings out there. Option Qs, the Nifty PCR data is at 1.14, which is indicating perhaps it's not too much of an, at 1.14 versus 1.21. There are a couple of earnings that need to be watched out. Key among them will be Bajaj Finance and ICICI Prudential. But we are going to be going across to the guest to discuss the trade setup, strategies for the day, along with few stock recommendation coming in from Kush Bohra. Morning there.
Hey, good morning, Nickey. First off, thank you for having me on the show.
All right. A pleasure is all ours. I'm going to start off with your initial assessment, Kush. What do you make out of the current trade setup? Do you think a gap up opening coming in from HDFC Bank, which perhaps holds a 30% weightage in Nifty, would lead to a higher start for Nifty after 3 consecutive sessions of losses? What's the strategy for our viewers?
Well, first up, you see, we're already seeing the impact. If you see both the indices settling, in the pre-opening, incidentally, both the indices are, above their, resistance mark. 19,800 was turning out to be a stiff resistance for the Nifty, 44,500 for the Bank Nifty. We're opening above that mark. Now, if you see the options data set up as well for the weekly expiry, then this is where, 19,800 and 44,500 is where a lot of call writing is present. What I would be keen on seeing is that whether, this level sustains. Do we see some kind of, a short covering in these call options and, writing at higher levels? Or do the markets perhaps drag down a little bit and see profit booking? So that's the interesting thing. For me, as long as 19,800 is held, probably a closing or two above this level, and we could be looking at 20,000 and 20,200 plus levels. Essentially, I'm saying, perhaps new highs also, but a couple of closings above 19,800 is essential. So I wouldn't chase this gap up. I'd give it about 15-20 minutes, see whether the call writing at 19,800 and 44,500 shift to higher strikes, or do the markets perhaps respect those levels and slip back a little.
Sure. Also, your view and what do the charts suggest for HDFC Bank? Bajaj Finance is going to be coming up with numbers tomorrow. But apart from these two, do you think there are any private sector banks which perhaps look more interesting from a very chart perspective, if not for HDFC Bank?
So let me first, address HDFC Bank because that's the big one today, isn't it? Well, look, it is actually finding support near that 1500 level, quite dearly holding on to that level. And today we're seeing an opening above that. So I think this will place it in, good stead. Although I don't see a big runaway to about 1600, 1650 odd levels, but this could perhaps be the first signs of bottoming out. And hence, we'd perhaps want to start accumulating from an investor perspective. See, HDFC Bank and the likes were never really, a trader favorite counter. They were more of investor favorite. So this is perhaps a good time. This could be signs of bottoming out. So I would start accumulating HDFC as long as 1500 is held, and we're seeing a move above that. To your question about the private bank, if there is any other one that looks good, the one that actually stands out is Axis Bank. It's actually run up quite well. Was perhaps down bit the markets, but taking support at about 1,000 odd levels, which is also the 50-day moving average. So Axis Bank looks good. 1,030, 1,060 are the levels that we're looking at. On the downside, the support zone comes at around 975.
All right. Apart from that, I'd also want to highlight the fact that HDFC Bank has perhaps been the worst performing banking stock in this year, with the share price being down as much as 8% in the last 6 months, underperforming Nifty, which gained 11% during this period. But Kush, coming back to you, your two stock recommendation perhaps that you think could be the theme. Sure, NBFCs and bankings would be the core theme of the day for the markets. But anything that stands out for you barring these two?
Oh, absolutely. A couple of them. One from the FNO space is UPL. This stock's actually made a bottom quite early, and it's sort of, on a strong footing right now. So UPL is one stock that I have on my radar. 645, 660 is the target. 615 is my stop loss. The other one is SJVN. The stock's already seen a bit of momentum. We see this momentum to continue for the coming days. 79 and 82 are the targets that I have, and 73 is where I would place my stop loss.
All right, that's the word coming in. Perhaps we need to address in the stocks that need to be watched out for. And I'm going to be talking just about HDFC Bank before we address the market open, because that's going to be the stock of the day. All eyes perhaps will be on HDFC Bank, and a bit of adjustment related numbers are not fully comparable on YOY basis. But just for the benefit of it, net profitability is up by 51%, and net interest income is up by 30. Net interest income is up by 30% for this one. Gross NPA sequential basis is coming at 1.34% versus 1.17%. And the overall, if you talk about the numbers, they're not fully comparable, as the HDFC and HDFC Bank merger took place on July 1st. But I'm going to be talking about it in just a jiffy. Let's address markets open there for you. We were anticipating a strong start coming in for the markets, and it is pretty much in line with what the anticipation was. Well, we are looking at gains to an extent of 0.5% out there. 19,800 mark, the index heavyweight. Perhaps the one factor that now we need to watch out for would be HDFC Bank. How is that stacking up before we go on to Bank Nifty and perhaps the other mid cap and the small cap index? Look at that. Like we anticipated, it is a gap up start. Kush also recommending that it has bottomed out and perhaps is an attractive bet at this point of time. Look at HDFC Bank. The stock is up in trade. Remains to be seen if further decoding of the numbers will eventually peel off the gains that the stock is witnessing right now. But that's during the course of the day. Right now, it's giving you that pop that we're looking for. Let's also look at Bank Nifty. How is that stacking up for you? Bank Nifty, we are looking at gains and decent amount of gains, 0.75% of gains coming in for Bank Nifty, 44,500 mark, way above that level. Let's talk about mid cap index and the small cap index, just to see where the trend has, perhaps there is an outperformance coming in for that one too. Well, pretty much in line with the larger counterparts. 0.4%, nearly 0.5% gains coming in for the mid cap, and small cap, a bit of outperformance there, almost close to 0.9% of gains coming in for the small cap index also. Let's now talk about the PSU Bank index before we go on to Nifty IT, which is doing well in trade with gains of around 0.3%. Well, PSU Bank sector too seems to be participating into the rally. We are looking at gains to an extent of 0.75% even for the PSU Bank. Let's talk about the other sectoral indices that stand up for us. Perhaps in the early deals, we are looking at FMCG doing well. Thursday has got 3 big earnings coming out from the basket. Apart from that, let's also look at Auto Realty and the Pharma Index and the top gainers and the top losers that we have, before going back to Kush and asking him what does he make out of the current strong start coming in for the market. We're looking at the top gainers and the top losers just to see how the trend has been stacking up overall for the index. Just to see if HDFC Bank is perhaps one of the top gainers that we are witnessing. So let's pull up top gainers and the top losers on the list, screen right now. That's a bit of invisible. We kind of figured it out how top gainers and top losers are stacking up. So just in a jiffy for you. But Kush, come in on this one. What do you make out of the strong start coming in for the markets? We've seen that perhaps the gains that have been, captured by the market, gap up start for HDFC Bank. But do you think this will perhaps be, we would see more losses coming in for that one?
We wait and watch. The strategy that we just discussed. It's only been about 3 minutes, and 19,800 and 44,500 is held. But for whatever time market's been open now, 3 minutes, we've seen a bit of a cooling off from the opening levels. I know that we saw in the pre-opening space. So I'd wait, as I said, I'd probably give it another 15-20 minutes, see if both these levels are held. If they are indeed, then perhaps it'll be a good time, because you will see a very strong, sharp, short covering rally come in, at least on the bank Nifty, and that's the one that I have on my radar. Also, see from a technical perspective, there was a convergence of the 50-day and the 20-day moving average at 44,600, level. So if that is taken out, don't be surprised to see another, 300 points, 44,800 kind of levels on the bank Nifty, 44,600, rather 44,800, 44,900 kind of levels on the bank Nifty. So just wait a while. If these levels are held indeed, then you will see a sharp recovery, short covering rally in the bank Nifty, and that will also push the Nifty higher. So I'll wait and watch. As far as HDFC Bank goes, well, absolutely in line, with the market opening, and absolutely flat right now. But early signs of bottoming out. If you're an investor, it's not a bad time to start accumulating, the stock from here on as well.
Right, HDFC Bank perhaps is the top gainer on the index right now, and apart from that, we also have Grasim and Tata Steel, which are some of the other top gainers on the list overall. Let's also talk about the top losers that we have, something in the likes of perhaps ONGC, HUL and L&T are some of the top losers that we have on the list. What I would essentially highlight is the fact about HDFC Bank, where most of the street seems to be upbeat. The brokerages have been, we've spoken about how the losers have been, right? HUL, Britannia, L&T, these are some of the top losers. Of course, we also spoke about the top gainers, where HDFC Bank was the top gainer. But I'd also like to highlight the fact that the net profit for HDFC Bank, combined entity, consolidated and deduplicated during the previous quarter, let's just say the corresponding quarter of the previous year, stood at 15,251 crore, and in this quarter is 16,811 crore, which implies a growth of 10.2% as compared to the previous quarter numbers, corresponding quarter numbers. That's really less as compared to the HDFC Bank usual delivery rate of around 15% or more on the bottom line front. So that is one thing. Perhaps these are merger related adjustments that one has to be perhaps looking into consideration. It is much in line with the merger, but this is also something which can weigh down on the stock later part of the day if you see some amount of profit booking perhaps creeping into the counter. Ceat DLM is another one that you need to keep on your list. Revenue is up by 71% for this one. However, the EBITDA is down by 0.5% and the margins have shrunk at 8.06% as compared to 13.89% in the corresponding quarter of the previous year. Ceat DLM, where the net profitability, however, has shot up more than 100 times, 100%. The number is on 106% at rupees 14.65 crore as compared to 7 crore in the corresponding quarter of the previous year. Ceat DLM, just to see how is that stacking up for you. ICICI Securities, another one. Well, the stock right now seems to be doing well. Ceat DLM order book is perhaps the lowest that we've seen in 5 quarters, but the stock seems to be doing well. It is a subsidiary of the listed Ceat and also new listed entity that we are talking about, ICICI Securities. Let's also talk about that one. The revenue is up by 44% and the net profitability also has shot up at 41% for this one. What is really important and we need to capture is Jio Financial Services. Well, most of the investor community perhaps has interest there, and revenue is up by 46.9%. Look at the pop coming on your screen. 6.5% gains coming in. Revenue up by 46.9%. The net profitability has almost doubled at 668 crore versus 332 crore. The growth also has been largely supported by the dividend income. Additionally, around 150 crore of dividend income came through associates, and the interest income for the company, however, fell by nearly 8% quarter-on-quarter basis. Kush, coming on this one, Jio Financial Services, what do you make out of it? Do you think perhaps people are better off holding to the stock, or you think this pop perhaps is just the start of the new high that the stock can scale up?
stock was showing signs of bottoming out, for the last couple of sessions actually. So not surprised that the stock's actually given the breakout that it was, due. From a technical perspective, the data is very limited on that. So if I just squeeze this on, let's say, a lower time frame, as I said, it's very clear that the bottoming out signs were there, and the breakout doesn't come as a surprise. So my suggestion would be, if anyone's got it, in the demerger or perhaps bought it at lower levels, don't be in a rush to, book it. Hold on to this one. It could very well see, levels of 255 and 270, in the coming days. Anyway, there are signs of bottoming out. So, you have a trading stop loss very clear. So if it breaks, let's say the, 215 level, that's when you exit. But up until then, hold on to this one and ride the momentum.
All right, hold on to this one and ride the momentum. Mutual funds seem to be trimming the stake in the company since listing, but it is the first ever quarterly results for the company. The stock is up by close to 6% odd. But Kush, we are going to leave it at that. And thank you for taking out your time and speaking to us this morning.
My pleasure.
All right, let's actually address in the fundamental side of the story. Enough and more needs to be captured on the valuation of the private sector banks, along with that of PSUs. How are they going to be stacking up in this quarter? Let's bring in our guest, ASUTOSH MISHRA, Head Research of Institutional Equity at ASHIKA Stockbroking. Morning there.
Good morning.
All right, Ashutosh, can you hear us loud and clear? Perhaps we need to recheck and reconnect with him. We got him on a scratchy line. Perhaps that's the one that we need to figure out. But we are going to be talking about the other stock in news, right? Ceat, where the numbers have come in. Net profitability is coming at 208 crore versus 8 crore. That's also a big number that you're looking at. Revenue is up by 5.5%. And if we talk about EBITDA growth, that's coming at, the number has come in at 456 crore. Odd as compared to 203 crores. So that's more than almost double than what you could look at. Margins have come in at, margins have also doubled for that matter. Margin is coming at 14.9% versus 7% in the corresponding quarter of the previous year. There is a margin surprise clearly that you can see here, and the expansion is due to better product mix and lower raw material cost. Now, better product mix is due to truck segment contribution in the Q2 being lower than that of Q1. And two-wheeler contribution increasing in Q2 over Q1. But let's go back to ASUTOSH MISHRA and check with him if we are audible right now, and what does he make out of HDFC Bank, and perhaps which of the bank is now better placed as compared to HDFC Bank.
Yeah. So HDFC Bank results were quite good, it was very good in the terms of the future guidance which they have given it. Yes, this quarter was a bit disappointing on NIMS front. If you just set aside the NIMS and try to look at the HDFC Bank, other than that, on all other parameters, they have done quite well. And now coming to on the NIMS, why this issue on the NIMS front come? So it was on expected line because of the NBFC balance sheet transition into the bank. They need to carry a very high level of liquidity, and over and above that, ICRR by the RBI came into. So these two together resulted into roughly 30 basis point decline in the 25 to 30 basis point decline in the NIMS in this quarter. Going forward, we expect this to be more of transitory in nature, and NIMS to slowly move toward the 3.8% marks. And if you look, another important feature which was there, that ROA was at a 2% mark. So this means that even if there will be slight decline in the NIMS, which is normal because normally mortgage portfolio yield lower, at the same time credit cost is much lower. So the ROA performance of the bank will remain very good going forward from here. Management commentary was also very strong, and that's why I clearly see that the second half is going to be very good for the bank from here. So in my view, we will find that this bank may start seeing the reversal of the trend in the next few months from here onward.
All right, reversal of trend from few months from here on. That's the word coming in for HDFC Bank. But Ashutosh, also let's talk about the entire private sector, private banks put together. How are the valuations stacking up? Do you think overall for the banks are at a risk of asset quality deterioration? Do you think that is one of the factors that perhaps we could look at? There was an NIM compression in the previous quarter. Do you think that is a trend that perhaps we'd be witnessing for the banks going forward in this quarter as well? According to UBS, there is an increasing default risk in retail unsecured loans of bank. which could likely push up their credit cost. What's your assessment overall? What do you like from the private sector space?
Yeah. So if you look at we are discussing, a regulator has also highlighted this thing, CIBIL and some of the, individual credit rating companies has also highlighted that at least in some pocket of the retail personal loan, there is some level of, stress is getting built up, or stress may get built up going forward from here. But my view is a bit different from what was there in one of the brokerage report out there. I clearly see if suppose these stress will get built up, it will first get reflected into some of the fintech and the NBFCs normally who lend to the borrower with score below 600 or 650, where this stress is getting built up at this point of time. When it comes to the larger bank, normally they are lending to a very good quality customer, especially large bank. Now, I'm not talking about smaller bank out there. Large private sector banks are lending to the very good quality retail customer out there, and I don't see at this point of time major risk emerging out of this. We also have to be thinking, from the economic perspective. Per capita income is going up at this point of time. Economic activity remains very buoyant in the country. So even if suppose we are finding some issues on the retail front, it may not have a similar type of negative impact on the bank earning in the coming quarters. So at least I am very much assured about large private sector banks not getting any negative shocks from the retail personal loan thing. What I will be more focused toward is how they manage the cost of fund side. Cost of deposit is going up sharply in the system, and the banking is a commodity business out there, and especially credit is a commodity business out there. So the bank who will really able to manage the cost of fund very effectively, they will be able to win this race.
Interestingly, even within first, the question is, what do you like from the private sector bank in the pecking order, given the valuation and the growth profile that you're looking at? Let's start off with that, and then we'll graduate to PSU banks.
Yeah. So my pecking order for the private bank will be Axis Bank, followed by the HDFC, ICICI, and then Kotak it will be. IndusInd is another bank which we really like very much in the private space. And another bank is Bandhan, which we really like out there. So among the large three, I gave you the pecking order. But if you see the pack of all four, then surely the number one will be Bandhan, IndusInd, then HDFC and Axis. It will be like this. Yeah.
All right, Ashutosh, let's also chat about your PSU banks in that case. Do you think they're better placed as compared to the private sector banks? The run-up has been sharp in the recent past. Do you think the valuations now look a little more expensive than what they were as compared to their 10-year average price to book value put together for each of them? How are you looking at that space?
Yes, PSU banks rally was very sharp, and we are going to see, at least for few PSU banks, this rally may continue because still there is a scope on the valuation side of it. And especially on a cost of deposit front, they are doing very good job. Especially they have advantage because of the government backing on a deposit mobilization front. So till the time we are going to see this race for the deposit there, PSU banks has some advantage. Valuation is still reasonable for them. Growth is looking good. And in that context, few PSU banks will continue to do good out there. Yes, I am a bit concerned about some of the low-ranked PSU banks where the rally or stock price fluctuation is very high. I will look to avoid those, but large PSU banks like Canara, Bob, SBI, Indian banks are fairly well placed at this point of time.
Sure. My last question to you is about Jio Financial Services. The stock has shot up in trade today, and it's reported in a net profit number, which in sequential basis at least is higher by more than 100% sequentially at least. What do you make out of this NBFC, and do you think, how are you looking at the fundamentals now that we have more clarity in terms of numbers being the first quarter? What's your suggestion on this one? How do you read into the numbers?
So I look at a two angle from the Jio Financial. Number one is that if I look at a holding of Reliance Industry, which is there in the Jio Financials, that assured the current market price after discount itself. And anything which they will build over and above the current the holding of the Reliance Industry shares which they have in their treasury, that will be a bonus to the investor out there. So short term, we may see a very fluctuating result coming out from the Jio Financial. But if you try to look from the 3 years perspective, I clearly see a very good future the way they have planned it. If they are able to execute that thing as per the plan, the future will look very good for them. And at this point of time, it is reasonably valued. Current market price after discount reflect the Reliance Industries holding by the Jio Financials, and anything which they do on the other businesses which they have planned will be really bonus over and above current price.
All right. One more question, Ashutosh, that I'd like to understand from you is, would you prefer at this point of time a PSU bank more as compared to a private sector bank? Where is your preference going to be? Of course, you've given us a pecking order in private sector banks, but for PSU banks, do you think you're going to be more bullish on them as compared to the private banking space, and why? Ashutosh? All right, looks like we're having some amount of internet issues with him. We're going to try and patch that up, but at this point of time the stock seems to be doing well. Let's address in the market check before we wrap it up, just to see how the trend has been stacking up. 19,800 mark was the mark and the levels that we saw, but at this time it is holding on to those gains that we saw and is in fine health, I would say. It's just 19,817 mark, advances 46 as compared to 4 declines. So market breadth clearly is in the favor of advances. But I think we are going to leave it at that with Ashutosh, and thank him for taking his time out and speaking to us. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for the rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.